Meanwhile, total locked value in decentralized finance clocks in at over $55 billion, according to DeFi Pulse. Joining us now to discuss the crypto markets is Brad Yasar, CEO of EQIFI, and a DeFi lending, borrowing, and investment platform for ETH, stablecoins, wrapped Bitcoin, and more. Welcome to the show, Brad. So you're looking at DeFi. How is that comparing to the rest of the crypto markets right now?
Well, I think DeFi projects are moving in the same direction as the general market trends, but with the advantage that the projects that actually bring real value to the ecosystem are less speculative and are seeing less of volatility.
Any projects that you're particularly interested in watching right now?
Well, I mean, I'm very excited about the EQIFI and our upcoming launch. But aside from that, there are a couple projects that are working on bringing insurance into the DeFi space, and I think that's gonna be a game changer, because it's very exciting to hear the word insurance in decentralized finance, where a lot of the times, traditional financial people couldn't see the two coming together. And there is some really good work being done to bring some stability into decentralized finance products.
At the same time, stablecoins are in the news a lot these days, and El Salvador may even issue its own stablecoin, the colon dollar. I wonder how is that going to operate with the rest of the markets in your opinion?
Well, a successful central bank stablecoin has not been done yet, so I don't know how that's gonna really connect with the rest of the financial world. The challenge right now is stablecoins are widely used and adopted in the cryptocurrency space, but they're not widely accepted by the rest of the crypto community, which is something we're working really hard on bridging with EQIFI. So what I'd love to see is more acceptance of their stablecoin if and when it's successfully launched in the global banking systems. I mean, that would be a game changer if they can accomplish that. Issue a central bank stable currency, get it adopted within the country, and then have international counterparties that also accept it.
So putting aside the acceptance question for a moment, I mean, recently one of the hot topics in crypto has been the risks of stablecoins, right? Stablecoins have traditionally kind of been one of the more boring aspects of the crypto industry, and now everybody's talking about the risks. What do you see as the main risks of stablecoins? Like, what is the worst that can be? What are some of the worst case scenarios? If you could just break that down for us.
I think the biggest risk I see is loss of faith in stablecoins, because I mean, a stable coin is, for me, stabilized by another asset or something that brings that value lock in. And so far, even the biggest, most widely used stablecoin, Tether, has had a lot of challenges and a lot of problems explaining and being audited for the peg that they're maintaining every time they issue more Tether. I think that's the biggest risk. If the future stable coins, either programmatic or asset-backed, can't find a way to convince the general public that they are what they are. If it's a dollar peg stable coin, it has to have a dollar peg and the assets to or the mechanisms to provide that peg. If it's a euro-based stable coin, it has to be euros. I think the biggest challenge the stable coins, that industry as a whole faces, is proving to the users that it is truly stable and there is a mechanism and the assets needed to provide that value. Otherwise, it's just going to be a rush to the banks with stable coins, and that's going to be very difficult to watch.
So Brad, what does the rush to the banks mean? I just want to understand, other than the loss of faith, like, what is kind of the consequence of that? Because I think it's important for people to understand, like, what actually could happen. When you say a rush to the banks, what do you mean exactly?
Well, I mean, if you look at the traditional banking system, if they have a rush to the banks, they only hold a certain amount of the value that they have under their in their accounts available. So if that's depleted, then people are unable to withdraw their money. The same logic would apply to a stable currency. If everyone loses faith, and let's say Tether disclosed that it had 70% in liquid but non-fiat investments backing the asset, how fast can Tether get out of those 70% non-fiat assets to pay back the US dollars that people would want in exchange for their tethers? That would be a big challenge for that cryptocurrency. If we want to talk about El Salvador, again, if they say our asset, our digital bank cryptocurrency is backed by this asset, whatever it is, and they can't instill the confidence in the user base that that is true, people can go and redeem that digital currency to a point where it collapses because you can't liquidate fast enough all your portfolio if everyone is trying to get out of your asset at once.
So, Brad, we have Janet Yellen having this meeting today regarding stablecoins. What do you think will come out of it? And ultimately, what will it mean, particularly for DeFi? You know, we've been talking about the effects of stablecoins, but what would happen in DeFi itself, and what would happen in Bitcoin and ETH, for instance, and some of the other major traded cryptocurrencies, if there's a regulation in stablecoins, if it's potentially onerous? Who wins? Who loses? What happens?
That's a really good question, and it has multiple parts. So I think, obviously, with EQIFI, we're fully licensed and regulated. So we support regulation, sensible regulation that gives us the guidelines to build new things and try new things and instill confidence in our ecosystem that we're going to be responsible with the value that's trusted to us. So in a way, I welcome the meeting. The fear I have is a lot of the times these meetings don't have all the parties that should be a part of the conversation. A lot of these very high-level meetings don't have the right tech-savvy technological understanding and know-how to address the issue in a sensible way. And unfortunately, a lot of the times the parties to these meetings are old school bankers who have the most to lose from any kind of innovation. So you combine the two, usually it turns into some effort that really doesn't land the way it should. When we're talking about regulation, and regulation helping innovation, not hindering it. If some heavy-handed, overreaching argument comes out of it, of course, that's going to have a negative impact on crypto markets, DeFi included, Bitcoin included. I mean, DeFi projects are tied to Bitcoin and vice versa. It's one of the assets that with Ethereum that fuel the whole activity. So my concern would be that if some announcement, even if it doesn't become law, is pushed out and rushed to show force, certain parts of the world, United States to begin with, since we used that example, are going to be left behind because innovation is just going to leave those countries and go to maybe smaller countries with regulators that are more open to a dialogue. I mean, everyone wants to know where the lines are drawn, but if they're drawn too tight, then you don't have any innovation. You just keep doing the same thing. And obviously, DeFi is not doing the same thing.